Good morning, everyone, and daily plan time again. And here we are in the quote, seasonably bullish November, not to be confused with the seasonally weak October, which we just had. And we had a 3% crash bear market in October and hit all-time highs and are less than 1% away from them. So much for seasonality. That said, I am still bullish into the end of the year. There's so many structural forces at play, which is beyond the scope of this conversation, but just so I put that out there for the record. And I'm not like alone on the planet with that. It's kind of a pretty commonly held view. Okay, so that said, let's see where we are. Take a quick peek in the rearview mirror, but more importantly, see where we're going. And so we're trading at roughly the ES equivalent of 68, 65-ish. We closed at 68.40-ish. I'm always going to ish it to the 5-point round number. I'm not a believer that we turn at 68.41 and 32 cents. Okay, anyway, that said, quick look into in the rear view mirror, and not a very long peek. Just a reminder, last week was sort of an eventful week with, I'll just kind of widen the time frame a little bit. What was kind of an eventful week with the FOMC, with Mag 7 earnings, with Trump meeting with Xi, and there might have been a few other catalysts going on thrown in just for fun, and a government shutdown. Why not? A data vacuum. And with all that, we managed to poke our heads above 6,900 and pretty much stay in the zone. We had this breakout from the week before. We still had like some hangover. So we broke out from the 6,800-ish and bottomed out last week near 6,800. Round number, that's something to keep in our minds, just kind of for today and for the week going forward. And one more thing about last week, and this will be the short version of it, then maybe we'll circle back to the longer version of it. Okay. So last week, VIX was acting up on us. We had VIX peak out on Friday. Where was it on Friday? At like 18.5. This is the wrong one. Good enough. I can fix it here. Okay, close enough. Yeah. We had VIX point out on Friday at 18.5. The 9-day VIX kind of followed suit, but then kind of trailed off. The VVIX didn't pop as much proportionately as it's supposed to, quote unquote, statistically, all that kind of thing. But it is managing to stay stubbornly over 100. And so, the volatility space is a little roiled, which I personally like. Now, yes, that kind of sets us up for possible little downdrafts, but also sets us up for these multi-day drift ups or rallies as volatility fails to realize those puts decay, market makers buy back shorts or whoever buys back shorts, and we get that natural charm, Vanner, decay, rally up. So I kind of like having that there. Plus, as a premium seller, it gives me a little extra juice. Also creates a little extra, you know, danger. I suppose the street danger, Will Robinson, but that's what we get paid for, right? Okay, so let's get back to where I was. Okay, so with that said, and that's the backdrop. Um, Here's where we are. And so the expected move, and we're going to look at it a little more granularly in a minute. The expected move, the bottom is around 1840-ish, was around 30 points when I looked at it at 6 o'clock, and we were at basically where we are now, maybe down a little bit. So consider the bottom of the chop zone, Friday's close. Keep it simple. Consider the top of the chop zone a little bit below 6,900. Expected move top or 95. Kind of just know where these zones are, where these levels are. Quick observation or 2 or 5. Gamma is basically thin coming out of the October 31st monthly expiration. What do I mean by that? Is that simply there aren't a lot of large size, chunky positions in open interest that will need to be hedged very much short term because they're either out in time, so those deltas are kind of balanced, or they're further away. So again, it doesn't really need strong hedging demand. And so that's all that means. Doesn't mean we're due for a crash or a rally or anything. It does mean that all things being equal, we could get kind of a little bit wider, whippier moves, maybe, as we head toward the options expiration where things tend to tighten up. I think for today, this is options depth I'm using. I think I put a link in there, a discount link in. For today, I think the best way to visualize what's going on is to first look at the heat map. A lot of times I like to look at the positioning first and then kind of go to the heat map for more of a macro overview, because the heat map, in theory, encompasses every contract on the planet Earth, mathematically mapped out for whatever, for for speed and for convexity and all that. Welcome back, Selena. Selena's been working a lot lately. But what I want you to see here is what caught my eye is it's basically pale blue, which has been a lot lately, with a little shade of red. Red is market makers short. Magnet is a word I like to use. Hope people don't take it out of context. And so if we're above it, if we're at 68, 70, and we're near enough to the influence, we kind of get sucked into here. If we're below it, 68, 40, 30, we get sucked into here. But it's kind of a wide zone, call it 45, 50 to 60. So kind of where we are. Understand this. Now is where we have to flip to charm. So what charm is the natural decay of options. We don't know where spot's going to move. We know it's going to move, but we know that whatever happens, time is going to go forward. And so options will decay, assuming these are still there. We're just going to start with that, in a predictable direction or pattern. And so before I even pull up the chart map, let's just talk about this. This is market maker longs. So let's just say, to keep it simple, that's market maker. And those calls go from 50 delta, 62 delta, 65 delta to a 1 delta, market makers have to keep buying to hedge their position, causing that move up, that decay up. I know decay and up sound counterintuitive. That decay up as they decay or charm toward a +1 delta. On the other hand, OTHO, the stuff that's out of the money decays down to a 0. So if we're below it here, this decays to a 0 and pushes us down. And the inverse or opposite, where market makers are short. So just kind of keep that in the back of our minds here. Let's get back to the dashboard now. So here's what we're looking at. Here's that market maker short, customer long, customers, you, me, hedge funds, whatever, are long contracts over here. They're long about 1,000, a little more, 6870 calls. Another kind of 1,200 puts and 1,200 calls. So customers are long on both sides. So the deltas kind of balance out, but the market maker's hedging response there is liable to be exaggerated. And then 6850, round numbers. So we have 10 pointers, round numbers. Then I like to look at zones. So wait, before we even get to zones, let's get to the if then. If we're below 6850, all right, so let's just pretend that they, we're up here right now. That's not pretending, and market makers hedge that out. Then we pull back. Then whatever market makers bought to hedge this out, they begin to sell. And we open the door for some weakness below 50, certainly below 40 if we're red on the day. And there's nothing to stop us from a gamma point of view, not from a supply demand point of view, Fibonacci retracement point of view, RSI, LMNOP. From a gamma point of view, we don't really have an edge other than a little 6840 pulling us down. So if we get some weakness, if we get a VIX pop, if we get a nasty headline, whatever, or any combination thereof, we have that coming up. Oh, and we have the QRA today, the refunding announcement, and lately that's been kind of a nothing burger, but there are times when the market macro bros make a big deal of it. I don't know how the algos are going to are coded to weight it, whatever. But so grain of salt QRA, head on a swivel, ISM numbers. This market's been, seems to me, placing a lot of weight on what numbers we get because of the government shutdown. And now Powell kind of, dropped a little turd in the punch bowl of maybe we're not cutting again in December. And so that kind of contributed to the weakness we saw Thursday and Friday. And now Fed people are coming out yakking, and they're kind of echoing that playbook in one way or another. We had Max 7 earnings. They blew out, except for a couple that didn't, and the main complaint was CapEx, all this money spending. And so we have all this roiling going on coming into today. So I want to point out that these contract sizes are not particularly huge. Couple thousand here, these matter. 68.75 net 1,500. So this zone, say 75 to 50, matters. And if we stay above 50 and this decays up, that pushes us up, and this pulls us to 75. So there's a natural drift in that direction. if then. If over 75, we have market makers shorts. We have another drift towards 68.90, where we stall out, battle for 6,900. Up here, we have another zone broadly. Think of it 75, 68.75 on the bottom, 69.10 on top, with this 90, 6,900 inflection point if we kind of get bulled up. So we have this upper zone where we could have action. We have this 75 to 50 or 40 zone, 40 being the bottom edge of the expected move in Friday's close, where we have action. And we have, if below 50, let's pick another zone. We don't have to be overly rigid about keeping the zone. We have another zone, 50, 40, 30, 50 to 25 with something in the middle. Then below 25, things could look ugly down to 6,800. There's really nothing there. And, down into like the 85 area. Not thinking that's going to happen, but those are the zones. That's what we have in front of us. That's my girl. Thank you. Yeah, and so that's what I'm seeing for today. We'll talk about trade ideas in a minute. I'm gonna turn this over now for our erstwhile scalper, and he's going to talk about the E-mini scalping, and then we'll get back to talking about what's going on over here. Go ahead, Chewy.
Good morning, everybody. So interesting setup that I have here. If once price comes towards 68.97 to 68.900, I might be looking for a potential downside move. Nothing crazy. I think would be capped around to 10, 15 points to the downside. If we can hold above there, then I'm targeting potentially even 69.20 as a potential high for the day. That's kind of my conditional approach here. If by the opening bell, we start holding below 68.90, even 68.85, I'm going to be looking for that 68.70 level. So I think there's a little bit more room to the downside here. That does not make it more probable, if that makes sense.
So 68.70, by the way, is roughly that 68.40 bottom of the expected move, Friday's close area.
Okay. So I mean that's kind of right in that area, which I think if we can get down there and we don't break below, I think we can play some range back to the upside for today. I think pretty clean setup.
I'm sorry.
Just pretty clean setup overall this morning that I'm seeing. I think both sides could be in play today. Just depends which one will. The question is more which one will pay the most. And if I had to bet downside a little bit, has more room to pay, doesn't mean it's more probable.
Yeah, and from a gamma point of view, typically I have a trading view string for the E-mini also. I have it. I sent it to my subscribers and all that. I just didn't copy and paste it and get it in here in time. But from a gamma point of view, similarly, the upside has got more congestion, more cap, more short calls up above us, customer short, market maker long. So the upside looks kind of cappy at 75, 80 up there on SPX, add 30 for E-mini, so you get that 6,900, 10, whatever, up here where the price action tells us we should kind of cap out. The gamma kind of agrees with us. And to the downside, from a gamma point of view, there's not a lot of support. There's magnet choppy stuff pulling and could pull in both directions, but it's not as clean supportage to the downside, which would just open up the door for more of that chop toward Friday's close. Oh, thank you. Shameless plug here. So 2 months ago, my training's become so much more stable. Thank you, Doc. Still got a lot more learning to do. I really like hearing that, not just haha marketing, yay me. I really like hearing that people are learning that their trading is becoming more stable. That's real important. You know, a lot of us, me too, came in here trying different methods, you know, in here, I mean, to trade in. I'm sure Chewy's experience is similar. Trying different methods, different combinations of indicators until we found what suited us, what found our personality. But there was still kind of an instability or an inconsistency, a missing edge that kind of helped round it off. And I have found that this kind of helps round it off. It adds that extra piece of confluence of information, of consistency to whatever else you might have been using before. And then it may become your dominant way of thinking, or I guess maybe a side dish, but it makes the meal a lot more palatable. So yeah, glad to hear that. And I really, that's my goal, is that people become just more consistent in their trading, less reactive and more proactive, if that makes sense. Now, yeah, I'm just gonna leave it there. I'm not gonna get into reactivity versus proactivity and into a psychological lecture here. But what I will do instead is use that as a segue to talk about the 3-month trial that we're offering. And I put the description into the YouTube chat. It might have come up all chopped up. I'm not sure. And so through WHOP, you should get the same thing as Substack. It just said it's easier for us on an admin point way to do it. It's a 3-month subscription to the full bells and whistles, elite premium Discord. On Wolf, we call it elite, and Discord, we call it Substack, we call it premium. But the full bells and whistles, which includes the E-mini scalping room, which includes some trades that I put in other stocks other than SPX, and whether it's credit spreads, it could be anything from a credit spread to a short-term scalp in a stock, to a covered call that I say, you know what, I like this covered call into January for 12% or 10%. I'll consider it a bond substitute or just an income generator. I have the extra buying power. I'll do that. Different strokes for different folks. Some might be more thematic or fundamentally driven, something I like for whatever reason. We also have earnings related trades or volatility trades that Dan, some of you might know Dan from other services, puts in for us in there. We have the unusual whale spot in there. And so that's the whole thing. Why 3 months? So it's 3 months paid monthly. Why 3 months? I think it takes about 3 months to kind of get this, to at least be comfortable enough where you look at this and it tells you a story of some sort, where you can get your trading become more consistent. And so it's kind of designed to help you help yourself, so to speak. Now you can always take just a regular monthly, with just the SPX without that and not get, but the special is in the full bells and whistles, so you get the whole package. Did you put the link in?
I didn't put the link, but I sent it to you. I can't put in the link from the YouTube side, but it's in
Okay,
the
so
DMs.
I'm gonna stop screen share for a second so I can go find the link amongst the chaos of where I have stuff saved. I am not the most organized and meticulous when it comes to tech in specific. Well, in general, I'm kind of more Taoist Zen, go with the flow. But when it comes to tech, it's doubly so. I don't know what I'm doing a lot of the time. All right, let me find it. All right, I have to look back somewhere. Discuss amongst yourself. Entertain them, truly. Say something.
Let me give you guys my NQ levels for any of you guys.
Oh, there you go. Good idea.
NQ.
Hey.
Obviously, we're having a nice little push here at Open. If this is kind of what I was watching for the Open, if we don't hold this, what are we at? 182, 185. I'll be a little bit more general with NQ because the values are more. But so about 180. If we can't hold 180, I think 100, maybe even 0.85 is in play today for the NQ. Even I like to give a little bit more of an extreme just in case you hold your winner. I'd say even 0.05 is in play for the NQ, which, I mean, if you know NQ, 100 points pays well. That's kind of my game plan here to see if we're holding above or below this 186, call it 190 little area. Now, if we can get down to 0.18, 0.20, I might expect a little bounce. But if we break below then, 950s in play, 850s in play, we start getting a little bit more aggressive on those targets. Big if though on NQ. That's kind of what we've been trading more in the platinum trading chat. So tell me if you guys want me to trade a little bit more ES than NQ, but I find that for the time we do spend in there, NQ makes our money much faster.
All right, I'm just putting up an NQ chart and something's not happening here. I'm going to put up an NQ chart with mental accused levels. And yes, I subscribe to, that doesn't look right. Something looks wrong here. I'm not sure what that is. So I'm just going to, I don't even know where that came from. Okay, not sure where that came from. I obviously hated the wrong thing. I think this one I have to update. You have no risk of getting a slick presentation from me. So anyway, let's see. There we go. So here we have some NQ levels from MQ, mental Q, and I use them as well. I subscribe to about as many subscribe or have tried just about every service there is out there, and I keep subscriptions to some that I barely ever use, just in case. I do this for a living, quote unquote, and I help guide other people. I'd rather pay for it and not need it, and need it and not have it. It's like tools. That one time that you need that one socket wrench or a saw blade or whatever it is. I'm not a tool guy, but I have friends who are. Apparently it makes the job all that much easier and saves you a lot. So anyway, thoughts on 6780. 67.80 all the way down there. Can you trade NQ options? Sure.
Futures.
Yeah, you can trade future. You can trade NQ futures options in the pre-market. And actually, I've been playing with that a little bit. So yes, absolutely.
Yeah,
Absolutely.
I mean, just so everyone knows, sometimes I give you all targets that seem out of the realm of possible for today or for any given day. The reason why I like to give those targets is because if I am in a trade towards one of those targets, I like to hold my stop and potentially just squeeze that lemon as much as possible. And if I don't have kind of an unrealistic target, it's harder to hold and profit for me. So I never really expect those targets, but if in the off chance I am in a trade and my stop is in profit, then it gives me extra confidence to hold and hold and hold. And that's how I get big wins.
And so circling back to the NQ options, yes, you could trade them. And I've been experimenting with, and this is there's somebody in Substack called Option Seller. She's relatively new and she's really good. And I've been doing a few little things with her. And she trades NQ credit spreads and sells NQ, which is a wild animal. And if you don't have the stomach for it and you don't have the buying power for it, stay away from selling NQ futures because you could soon be looking at, oh shit, I'm down on paper $25,000. What happened? So, just bear that in mind. There's ways to mitigate that. I'm just saying, but that's a long version to the answer of yes, you can. Yeah, people like NQ because you get a lot of movement. So if you're a scalper, you're going to get the movement. Okay, now let's get to looking at some levels for iron condors. I would think many of you by now know that that's kind of my bread and butter trade, and then we just kind of work around it for everything else. I like flies, I do all kinds of stuff, but 67.80, I mean, there's not much juice in the juice bar there. 15 cents. I know some people like 5 wide. If you don't mind taking a little heat down here at 90, 85, but with an expected move here of 40, which I call bullshit on, because if we look at ES, we have an expected move of 27. That's the real expected move. This 40, I don't know how Tasty kind of gives that sort of fake number, and then I guess they fix it at the open. But so to be safe, anywhere away from the round number, gun to my head, 68.25 probably holds, maybe with an undercut. Smaller gun to my head, we probably have a green to flat day if we have a red day down 5 S&P points or so. Anywhere with the expected move of around 30-ish now, within the expected move day. So getting back to the original question, for those people who like to trade 5 wides, which can be a little tricky, somewhere down 90, 85-ish, something like that, 20 points. It's hard to get into. What happens with 5 wide is sort of almost wherever you walk, because you have to pay more for one and less for another. It's hard to get much of a premium difference, in which case might as well take the cheaper one, the further one. So that's what I would say there. On top, so let's just say, pretend that's the 5 wide. And on top, well, we want to get away from the 6,900 area. 6,930 would be great, but once again, there's no juice in the juice bar up there. So something like this, 45 cents. Both the wolf links are the boot clamp. Okay, I put the wrong one in, so let me get the right one in. Okay, so and thank you for pointing for, let me stop screen share. Let me dig around for the link that I was looking for. Okay, this should be it. Is that it? Somebody tell me it's embarrassing. I don't even know my own links. Not embarrassing. I don't give a shit. Does that work? I think so. The title looks like it works. Yeah, you want to be outside the expected move, unless you have other information telling you otherwise, especially as a premium seller. All right, let's get back to the screen share. Let's get back to SPX. And so we're at 70-ish, kind of where we're supposed to be within the expected move. 75 was the stall area. Okay, so 45 cents ish on this looks reasonable for, that kind of 5 wide. I'm going to start off with, I like to start off with a wish trade. That's pretty good right there. 68.75, 67.85, 45 cents. I'm willing to put in one like that right here, right now. Do a similar for 50 cents. And I can kind of move around, head around it, whatever. Up on top. Hard to get decent juice on top. 50 cents. Yeah, I'm not crazy about that, but I'll put in one and be willing to manage it somewhat aggressively. I like that much better for 40 cents. 45 cents, even better still. Something like that. Now switching gears to a different method, I guess you could call it. There's more than one way to skin the 0 DTE cat. And something like this, a 10 wide below the 25 support area that we looked at. And really you could go looks like you could go, let's go on top first. You might have to go 15 on top, something like this. I might put them in separately, put in one 10 wide here. At 45 cents. And one 5 wide here. Oh yeah, or this looks decent right here, 95 cents a buck for something like this. And then I would kind of add opportunistically for a 10 wide. And there's different ways to skin the cat. You could even go a third the width of the spread 5 wide, which I'm not going to look at now. Well, I'll look at it just for fun, just for teaching purpose. So a third the width of the spread ish. And you have to get a little risky with that one. You have to go around there. You have to go around here. Third the width of the spread, 5 wide spread, above 40. Above 40. And the spread is 5 wide, 135 is a third. So that's a whole nother way to do it. I sometimes do all of the above, just kind of depending on the day. And I'll put in trades like that for teaching. Now let's talk about butterflies. It still brings up the boot camp. Chewy, can you see what's
going
on? The link for the elite, 90-day, service brings up boot camp. Doesn't bring up the 90-day service.
I just sent you the same one. It's bringing up the 1 second. There it is.
Okay, hold on. Let me stop screen share. Let me get the right link. Take 3.
And if whoever's trying to get into it, if you could just confirm that it's working. I think Doc might have just been sending the incorrect one. I'll send it into Streamlabs too, or StreamYard.
Let me just see. Put it on Twitter again. I think
we're good.
I put it there. Somebody else will tell us if it's the right thing or not. Try this one right below.
Did mine go through? No, I think you're putting in the wrong one. That was for the old monthly link. The one that was 99, but that's
try again. Copy address link. Jesus. Let's try this one. How's this one? How's that one?
That's the right one.
That's the right one. Yay me. Yay me. How do you like that slick marketing? There it is. See? Easy. It was there the whole time. You just it was camouflage. It's the old camouflage style link. You're welcome. Oh, Jesus. Okay. So let's, all right. So one other thing, and then we'll go. Oh, we got that up. I don't want to see that. Hold on. NQ, SPX. I don't know what happened to my levels. They're gone for some reason. There we are. Okay. That's what I want to see. Entire screen. All right, stop sharing. Now let's go to some flies. I always like to have a few flies in. And what I like to do, and we do this more in the room, like once like the condors get in and maybe little scalps. Well, I like to do it. I like to look for a couple of 10 or 15 wide flyers, or sometimes if I can't get what I want, a 5 wide that I'll build around, and just kind of leave them there. And, when we get the intraday movement, a lot of times they're easy to take off for 100-ish% profit, 50-ish% profit. And if you're going to lose, you're not going to lose a lot unless you just leave them there till the end of the day. And they serve as good reference points. I use them for a lot of things. Okay, so one thing we know is we have this potential magnet down to 50. So if we have some weakness, I want to catch that. We have this 65. So I want to catch something down to 50 and maybe stopping at 68.40-ish. And so I'm going to go, and it just depends on what I can come up with. So butterfly put, go. I'm going to make it wider. So that's not bad for 55 cents right there. I might want to move the strikes up one. I kind of like that. 55, 45, 35, a cheapie for 50 cents. Now, I understand in the real world that's $50, and if you don't feel like throwing out $50 or risking $50, and well, again, you can get out with a $10, $20 loss almost automatically. We had that 68.90 stall on the upside, if you remember. We always have the battle for 6,900, always a good reference point. Yeah, these tend to be expensive, see? Not a great cheapie up here unless you want to go play for a move over 6,900, which I don't know how likely that is. So I often do in this case, like I said, I'll put this in for 35. I might just bite the bullet and pay a little extra right here. See if I can get it cheap. Put it in for 85 cents, see if it fills on a pullback. And I'll do something like that. Do you ever trade 1 DTE? Yes, I trade 1 DTE pretty much all the time. Intraday, I'll be putting on 1 DTEs, and I'll be putting on flies, all of the above. So the answer is yes. The answer to all of the above is yes. And so I didn't do my homework yet on a 1 DTE, but let's do a quick look. Where would I go on 1 DTE? Well, I want to go with it looks safe, and I don't really see. Okay, so I don't see this market maker positioning. I don't see a nice big green. I see a big ass, pardon my French, market maker short magnet down at 68.30. I don't want to be near that. This is adding to the pull down for today. This also could create charm, even though it's 1 DTA, because it's kind of large. We don't have much on the bottom to act as support. No market maker long, so there's no trade there. Up on top, in the 1 DTE, 68.90. Not much there. So I wouldn't do a 1 DTE right now simply because I don't have a reference. Now I have some stuff for Wednesday. I might do a 2 DTE. I always do Fridays. I have Fridays on that I'll be adding to today, and I could have spoken about that. And that's it. I know we have some new people that signed up over the last few days or weeks, so welcome. I'll do my best to try to get everybody oriented within the trading day. A couple other things I guess need to say real quick if you're new to this or even if you're not. During the day, intraday, large trades come in that kind of help set the edges and help redefine or zero in on the range. And we get those in the room and they're mentioned and we kind of adjust as we move along. Okay, that's it, everybody. Have a great day, trade safe, and more will be revealed. Take care.